Hello and welcome to Asking for a Trend. I'm Josh Lipton. For the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. The end of the trading week is seeing red on Wall Street after additional tough talk on tariffs from Trump. And at the end of the session, all major indices ended the day down. Get a good look into the health of the U.S. economy. America's largest banks prepare to report earnings, and we're taking a deep dive into what to expect. And speaking of earnings, Levi's is dressed for success after a strong quarter. We're taking in the U.S. denim maker's chief financial officer about the company's growth. Well, bank earnings on deck with JPMorgan setting the tone on Tuesday. For more, we're bringing in Yahoo Finance's banking reporter, David Hollerith. David, let's start big picture, David. So the XLF has made a big move off that April low, right? As we head into this earnings season, start high level with me. The trends, the themes, what are you going to be listening for?
Well, Josh, it looks pretty good, I would say, from the analyst perspective. Effectively, April started the second quarter in a rocky way, and then things got better. And as a result of that, most analysts are expecting big banks to beat their mid-quarter guidance. So that's a good sign. Things still are not going to look stunning from a profit perspective. So really what a lot of people will be paying attention to is what their expectation is for the second half of the year, hearing from all the top bankers and getting kind of a check-in on the economy.
Jay, give me the trader's take. What do you want?
Yeah, well, we follow the trends. And what did we see? We see the XLF trading at all-time new highs going into earnings. What did it do this week? It pulled back a little bit. To me, price is telling us something that these stocks are ready to go and go higher, and some of these pullbacks can give you good entry levels. I look at JPMorgan, Goldman Sachs, all-time highs, coming back a little bit. If they falter, if they don't crush it, and JPMorgan, especially if they don't give this great guide, which is very important, it may pull back, but I don't think it's going to pull back into a new downtrend. I think it's going to pull back to a level where someone can get in this stock. So to me, I think the runway has been set, the planes are lifting off, and I think we're set up to do great things over the next couple quarters based on the price action we continue to see in the stocks.
So it was interesting, Jay mentions JPMorgan there, because we had two analysts on that name this week. One told me he's too rich. The other said risk reward looks attractive. I'm not going to ask you about valuation metrics, David, but JP Morgan, when Mr. Jamie Dimon speaks, Sir Jamie, what are you going to be listening for there?
Well, I mean, I think Jay was saying off camera too, is that they typically Jamie comes out and it does not spike the football, so to speak. I've spoken to a number of analysts that are expecting JPMorgan, just based on interest rate movements, to have higher updated guidance. We'll see how that plays out. But someone inside the bank actually told me once that about 80% of their earnings is baked in on January 1, and the rest of it is kind of like what they're planning for. So it's interesting to think that they have for a while forecasted what they're going to do. And really the question is just how they feel about the future and how optimistic Jamie Dimon wants to be.
How about regional banks?
Oh, regional banks, they're just starting to turn. We just got back above the regional banking crisis levels that we broke down below. And what I want to see at the regional banks, I want to see some talk about mergers and acquisitions. We have talked about this administration clearing that road so we can see mergers and acquisitions. There's only been one clean merger in the regional banking sector, or in the banking sector, going back to the financial crisis. That was 2019 when Truist was formed by SunTrust and BB&T. Every other banking merger going back to the financial crisis has been out of necessity. Signature Bank falling apart, obviously going back to the financial crisis, Bear and Lehman. You have to go back to BNY and Mellon in 2006 to see a merger. So I want to see some optimism. I know rates are going to be a killer because the mortgage business has not been robust, going back to what we used before. But I think the regional banks, we've started to turn a corner, and there could be some chatter about some M&A activity going forward. That's what I want to hear.
It is an interesting theme, David, to talk about M&A, because when Trump, we learned Trump's going back to the White House. Hey, it was pop the corks. Here comes the party, right? Going to cut red tape. Lots of M&A on the way. Is that what we're seeing?
Yeah, it's kind of an interesting effect of hopes were dashed in April about what was thought of in January, and now we're kind of back to this. At least if you look at the stocks, we're kind of back at this point now where a lot of people are excited about the second half. There's some areas we know more about tariffs now, and I think that there's a little bit of an understanding that even with uncertainty, there's less fog, and so companies can make decisions on mergers. As far as bank mergers goes, there's a clearly the Trump administration has telegraphed a deregulatory agenda, and one part of that is going to be making the process smoother. So even if there aren't a ton of bank mergers, banks can a lot more easily try and apply. So that's probably something that we'll see. And scale obviously has become an increasingly important thing that a lot of bank executives are talking about now.
All right, earnings on deck. David has a very busy week ahead of him. That's the bottom line. Yes, thank you, David. And a big thank you to Jay Woods, hanging with me all afternoon. Jay, it was great to have you. Final thoughts, Jay?
Final thoughts. I'm excited about earnings season. I think that we've gotten through the worst of what could happen this year when we had Liberation Day. The market told us something this week by shrugging off some of this banter from the president. Will he not chicken out and really put his foot down? We will see, but something tells me there are smart people around him, Scott Bessent being one of them, where we will get a few deals done. We'll kick him down the road. We'll claim victory, but the earnings picture looks bright, and I think we're going to set up for a solid second half, and it should kick off with the financials this week.
Jay, it was great to have you on
Great
set.
to be here.
Appreciate it, sir. Stick around. Much more Ask for a Trend. That's still to come.
We had a standout quarter. We beat top line, bottom line, and raised full year guidance. A special shout out to the teams around the world for what I call delivering the magic of the and, which is growing our top line and bottom line, growing the direct to consumer and wholesale, men and women, tops and bottoms, and so we feel really good. We're had 3 consecutive quarters of high single-digit growth, beating expectations. So we are entering the second half with strong momentum. And this is the momentum, and we feel really good about the fact that strategies are working, that enables us to manage through the uncertainty. Tariff situation is fluid. We took a position, which is our guidance assumes an additional 30% on imports into the US from China and an additional 10% or tariffs on imports into the US from the rest of the world. And so our view is A, the momentum, B, the fact that we are competitively positioned. So as an example, 60% of our revenues are outside the US. Our sourcing base is very well diversified. And we believe, given the momentum, the teams can do a few things to kind of offset and mitigate this. So, we're working with our vendors to price the second half as well as the first half of next year. 2/3 of our growth is driven by higher volume, so that gives us a competitive advantage. We are also in the process of driving higher full price sales because our products are working. We're targeting some minimal pricing actions. And so a combination of all these factors, we believe, will allow us to mitigate the uncertainty.
Mm-hmm. And you were just saying how your guidance assumes 30% tariffs on China, 10% rest of the world. But as you noted, there's a lot of uncertainties here. If we do see higher tariffs, do you guys have a plan B to pivot and maybe be a little bit more agile to account for this unknown?
Yeah, great question. And the answer is yes. We are scenario planning. In fact, late last night after earnings, my team was already working on different scenarios given all the recent announcements. So we believe we have an agile supply chain base. We believe we have a team in action. A company that's been around for 170 years has seen a lot of things. And the agility that we have, the fact that we can chase products that are winning, the fact that we can diversify our sourcing base, I think are just examples of agility in action.
And Levi said it plans to absorb some of the tariff costs for now. What does that mean in practice? And at what point will you have to pass on costs to the consumers?
Yeah, that's the last thing we look at. The things are what can we absorb, through the relationships we have with vendors, through cost actions that we can take, through, the other fact of the matter is, with this pivot to our DTC first, which is our stores and e-commerce, we are in control of the assortments that we are offering to our consumers. And we are driving higher full price sales, fewer markdowns, because our product offers are working. And so we look at all that first before taking targeted pricing actions. And given the brand momentum and given the innovation that's coming, I see it. I know what's coming. I'm wearing the blue tab trucker jacket and the blue tab denim bottoms. The collaborations. Yesterday we launched a collaboration with Nike, and that is selling out. So I think there's enough brand heat and brand momentum, which ensures that our view is that the brand's never been stronger, and the brand is in the center of culture. We have a partnership with Beyonce. We have other musicians around the world, and so I think all that should help carry us through.
Yeah, I just went to the Beyonce concert. Levi's jeans stuck in my head during this entire segment. But when you look at the consumer, what sort of spending trends are you seeing? Are you seeing any trading down in any capacity? And it was interesting on your earnings call, you guys called out baggy jean shorts are making a comeback too.
Yes, they are. Really appreciate and thank the partnership with Beyonce. And so, to your question about the consumer has generally been resilient, not only in the U.S. but also in the world. We have different price points for different wallets. Our product categories. We have a tier 3 product that's offered between $40 to $50 in the U.S. through our wholesale customers. We have a tier 2 and a tier 1 product that's offered at higher price points through our direct-to-consumer, channel. And so the different price points for different consumers, depending on the wallet. The other piece that is of real focus is the product pipeline. You talked about baggier shorts. We have baggier, straighter fits for men. The 502. Which is a tapered fit, really works well. And we're doing all this while growing our slim and skinny jeans too. So, a very democratic brand. There's something for everybody. Also based on the wallet size.
And Hermit, you were talking about the different places you could go with your strategy in order to account for various tariff uncertainties. I'm curious, when you look at your outlook and you look at where the company's at, what do you think the biggest risk is? Consumers pulling back, or maybe more chaos within the trade realm?
I think uncertainty is not great for any business. Getting clarity is important, and that's why we said here is a assumption we are using to think of the business over the next 6 months or the next 12 months. I think that's more important, is getting clarity, driving less uncertainty, both for the consumer, for our customers, that's the wholesale retail partners, as well as for our shareholders. And so that's the piece that we think about, and that's why scenario planning, different scenarios, and having game plans ready in the event of whichever scenario gets effective, I think is the best thing to do. We have a task force, a tariff task force that is working through this 24/7. And we have deep relationships with vendors. Our connection with our fans and our consumers is pretty evident that's working, because the other piece of it, Ali, is we cannot take anything for granted. We have to earn the respect of our consumers every day.
Since launching their first mission in 2023, Varda Space Industries has been utilizing microgravity for pharmaceutical research and has completed 3 successful launch and return missions, with a 4th currently in orbit and a 5th expected to launch before the end of the year. Varda Space Industries announced a Series C fundraising round earlier this week of $187 million, bringing the total amount of capital raised by the company to $329 million. And Will Brewy, Varda Space Industries co-founder and CEO, is here with me to discuss the next steps for the company. Will, it is great to see you and to have you on the show. Maybe to start, Will, for the unfamiliar, the uninitiated, Will, walk us through Varda's mission, its point and purpose. What's the problem you're trying to solve for, Will?
Yeah, absolutely. I'm glad we're starting with that, because space drugs is a fun and exciting idea. The reason why we formulate pharmaceuticals in orbit is because there is no gravity there. There's microgravity. And so what that means is that we can create drug formulations that otherwise would be impossible on Earth due to gravity. So it's almost like adding a whole new knob to the manufacturing process. And when by formulation, I'm talking about going from an IV bag to a shot, or from a pill to an inhalable. And just like temperature allows you to change the chemistry and the outcomes of chemical systems, gravity allows that as well. And so we want to introduce new drug formulations by processing them in orbit, in microgravity, and then bring them back down here to patients on Earth. And it's only possible now because of the commercial launch industry.
And what is so special, Will, about microgravity that allows you to do this?
Yeah, so microgravity changes the chemical outcome. So for example, if you want a very unique particle or a higher purity within your crystal, we can do that in microgravity that you might not be able to do on Earth. So more pure crystals, more uniform crystals, and those crystals are ultimately what drugs are made out of. So if you take a pill, that's inside that pill is the active ingredient, which is in crystal form. And so that's why the crystal physics of microgravity is so important for developing these new drugs.
And so the news this week, Will, you just announced that you raised $187 million in fresh capital. What does that mean for the company, Will? How are you going to put that money to work?
Yeah, it's really about growth. So you mentioned our history, right? We have 3 successful missions to date. We've flown drugs so far to show the proof of concept. We have a 4th one in orbit now. And so this capital is really about increasing cadence, both here on the ground with our pharmaceutical lab. We opened up a new lab down the street to vet and create drug formulations specifically to capture the value of microgravity, and then also launching more spacecraft quickly and fast and at a higher rate. And so that's really what this capital is about, is more of the same, but just more production.
And as you launch more spacecraft, Will, in terms of missions, how many do you think you're going to be able to do, let's say, 12 months from now, 24 months from now?
Yeah, so this year we have 4. Next year we have 4 as well, and we're the year after that 7, 9, and then 12, ramping up to 1 every month, and then right after that 1 every day. So what's nice about this business model is that the unit economics support kind of shipping to space and back on a daily basis. Shipping, there's no real reason why it can't be, and so we're building it.
And you mentioned the unit economics. Well, how much do these launches cost?
So right now, our launches cost about $2 million per a flight. So the shipping is still more expensive than, say, FedEx shipping. But as those costs come down, we're able to increase the number of drugs that we can make. So right now, we're focusing on the most lucrative drugs, the ones that make the biggest impact. But remember, we're doing only the active ingredient. So even though it's a $2 million launch, we're able to do a lot of different things and improve a lot of drug formulations just with a single launch.
And when you bring these materials back to Earth, Will, what do you expect the demand to be like? And where will the demand be coming from?
Yeah, so the demand will be coming from patients that would otherwise not be able to access a drug. So a good example would be the drug Keytruda that Merck flew on the International Space Station a few years ago. That drug is currently administered via an IV bag. And so, but in microgravity, you can convert that formulation from an IV bag to a shot. So imagine the folks that don't have access to a clinic that would be able to benefit from a subcutaneous shot. That's one example of a formulation change that will benefit patients that wouldn't even have access to the drug otherwise.
Will, great to have you on the show today. Thank you so much for your time.
Absolutely. Have a good one.
Time now for what to watch in earnings. Banks are kicking off another earnings season alongside some other big names. We're watching JPMorgan, Citi, and Netflix. Starting off with JPMorgan, the largest bank by market cap. It's set to release its second quarter earnings on Tuesday. That's before markets open. With a period of uncertainty following Trump's tariff announcements, expectations are that banks will report trading revenue gains, mostly attributed to record trading after President Trump's Liberation Day tariffs. Also on Tuesday, Citigroup will report its second quarter earnings before the markets open. Citi also benefiting from the trading day highs seen after Liberation Day. Analysts expecting the banking arm will also see gains from M&A over the second quarter. And finally, Netflix announcing its second quarter earnings on Thursday. That's after the markets close. The streaming giant is outperforming this year, but momentum appears to be stalling, even though the company announced plans to break into digital advertising, live sports, and video games. Despite that, analysts still anticipating Netflix to beat earnings estimates. Well, that is a wrap on today's Ask for a Trend. Be sure to come back on Monday at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet. Have a great night.